I'm trying to stay engaged.
Did we
the whole
surprise
show.
you with
No,
the money
I'm
segment?
trying. I'm engaged with you so that you have good segments. So I keep this thing on. The wheels don't come off. So now I can't prepare during the show as I used to. So. But we're gonna wrap.
Money in the bank.
Rates are good. Pretty exciting.
You know why? Why?
Free money. You understand what I'm saying?
Hey, welcome back to the program. This is the only place in the United States right now where you can get free money.
Free money.
Free money. That's what it said in your intro.
It does.
Yeah.
It does.
Great rates and free money.
Yeah. So we got to probably recut the entrance.
Okay.
Right? That'd probably be great. So another great week in the markets. So let's just touch on things. I got so much stuff today. I'm trying to think how do we do it. So we'll go. Let's start with rates are high. Went up again.
Okay.
Don't listen to the experts because they all keep saying it's coming down.
Yep.
I think our experience is it will come down when it comes down, and we think that will be sometime soon.
I like what you said at coffee. Rates are high, just a little bit higher than yesterday.
Yep. Yeah, the headline here, I'll go to that headline. This is great, right? It says, yes, mortgage rates are now at the highest in more than 20 years, but not much higher than yesterday. Yeah. Just a little bit.
Just a little bit.
A little bit higher.
Yeah.
So right now, I mean, we were working with a mutual client yesterday, and we're quoting out 7.375, 7.5. That's 30-year fixed money. It's in that range. I can't say specific because then you have to give an APR, blah, blah, blah. So rates are kind of mid sevens. So have that low to mid sevens right now. And I'll tell you, that's also paying a 1% discount typically.
Adjustables any better?
No.
Oh.
Not at all. So it's really tough to find. I mean, just money's expensive right now. So one of the things we talked about yesterday, and I'm just going to blow through a bunch of stuff, was just we did a 2-1 buy down for these folks just because there's like, God, we have you got to find out what drives the person.
And explain to the listener what a 2-1 buy down is.
Okay, yeah.
What is a 2-1 buy down?
2-1 buy down is starting, let's say the rate is 7.5. We're going to start 2% lower, so 5.5.
Okay.
Next year 6.5, and then 7.5.
Okay.
Right. So 2-1, start 2% lower, goes up 1% each year.
Okay, 1% each year.
So we looked at it because these folks had cash, but they wanted a lower monthly nut.
Okay.
Some people will take the higher monthly because they don't have as much cash. So you got to kind of balance it out. So they said, what's it look like? How can you help us get into this property? It's a property in Farmington these folks are really interested in. The price point's beyond where they want to be by about 30, 470 is where they want to be. This is running close to 5, so of course, because you're a realtor, you always oversell people.
Yeah. We want them to pay 5.25.
Yeah, that's great. No, I'm just kidding. But so we did the 2-1 buy down, and we're saving them, really, really good money, right out of the gate. So we're saving them, what was it, 500
and something.
500 a month right out of the gate. So it was a way for them to get in, feel comfortable, knowing that and hoping that the market will shift. And we believe the market's going to shift. It's just the when is a tough deal because everybody, that's a moving target. And then everybody looks backwards and says, oh, yeah, of course.
Yeah.
Well, when you're coming to me for counsel on that, let's make a sound financial decision based on what you're doing now. And then we know rates will come down. It's just, I don't think it's going to be, quite honestly, I don't even think it's going to be Q1 of next year anymore. No. I think we're looking Q2, Q3.
Well, they're talking about in the October, November that the Fed is going to raise rates again.
12% chance is the article that I read this morning on that when I was preparing for our segment prior to our segment.
Okay.
So it may come, but we'll see.
We'll see. The experts say.
So 2-1 buy downs. Here's the other thing that is interesting to me. So there's an article, the Kiplinger letter I send out quite a bit, just came out this morning, was reading that. And it's amazing. We're dealing with inflation here, and the problem with why rates are going up, they're trying to slow down inflation. And they're like, inflation isn't slowing down. And they said before we're going to feel comfortable, they have to see job growth decline. Well, those are all negative things, right?
Yes.
But then I'm reading this, and it goes through, and it says in China what's going on. Well, in China, same thing. pressure to step up more monetary and fiscal support. Government won't rush into this. Going into the same thing that they're dealing with, the same thing, inflation. It's crazy how it's worldwide.
Right. Well, I read that China is actually coming into a period where they're worried about deflation. Because some inflation is always positive.
Yeah.
Because that's a signal of a growing economy.
Well, it says right here, Keith, consumer prices in China are declining as economic growth falters. Consumer price inflation finally slipped into negative territory in July, following 10 consecutive months of decline for producer prices.
So there's a fine line when the Fed is dinking around with rates and stuff, trying to crash the economy or slow they may succeed, and if they succeed, that's not a pretty picture,
right?
At all. So, I just think it's an asinine way to go about it.
Yeah, I understand that. And then I was talking with my business partner who's from Canada, and we were talking about their economy because he was up there. Yep, same thing. Inventory's low. It's like inventory's low everywhere. Rates are high everywhere. It's like this whole global thing.
So why don't we address that part?
Yeah.
Why is inventory low? Let's address that.
So it's just interesting what's happening. And then, so rates. So wrap up on rates. Rates are high. Mm-hmm. They're going to stay this way for a little bit, and there's strategies we can take to put you in a good financial position, even in the midst of, right?
You and I ran those numbers on the 2-1 buy down this morning, and they get their money back in
about 7 months.
In about 7 months.
Yep.
Okay, so from months 8 on, they're ahead of the game.
Yep.
And we don't think that rates are going to come down significantly for a year and a half. So so for a year and a half they're out ahead of the game. Then when rates do come down, what are they going to come down to?
Mm-hmm. Yeah, and where do you pull the trigger?
Where do you pull the trigger, and how do you balance that?
Yeah, our monthly savings 523 year one, second year 267. So up a month, and that's significant. So we have ways to still make it affordable and palatable. And then to shift gears, completely different.
Okay.
Watching some stuff on the border, right? And the Mexican border, and just how it's just basically an open highway.
Right.
Okay. So I'm thinking about that, and then the same thing. And then this week, my oldest son has an opportunity to go play basketball over in Spain, potentially, right? So, and they say, here's the things we need to come into our country and work. Mm-hmm. He's at the FBI office in Minneapolis. He's at the Spanish. Did you know there's a Spanish consulate in Minneapolis? Me neither, but there is. Right? Diploma, all of his grades. He needed an official transcript, had to be sent. Passport, every page, right? Criminal background check, everything. Health disclosures. All this stuff has to be done before you can get into Spain to go. I thought, grab your tennis shoes and go. Find the gym. Right? No, not at all. It's amazing. I'm like, wow. Huh. But yet we have an open border.
Right.
People
are flooding in. You don't know who they are.
No.
Or what, and they have no qualifications at all.
It's just crazy. And they're checking his grades.
Yeah.
They're checking. We had to send a copy of his diploma that he graduated, right? I mean, just like, wow. It's like, wow, we didn't realize any of this stuff. So it's just.
And he's playing basketball.
Yeah,
it's like, we don't want any dumb kids playing basketball out there. You got to have a college degree and good grades.
Jeez,
to shoot hoops.
So it's it was pretty interesting on that front, and we'll see what happens there. But just interesting how there's our worlds are just so very different here in the U.S. versus overseas, and what we allow and what we don't allow, and all that stuff melds together and creating this economy that we have, and we'll just kind of see how it plays out. I liked your piece earlier on don't listen to the experts, and base it on your own experience. I think people have to do that, have somebody they trust that they work with that does an actual full analysis of what makes the most sense,
and then present it and have a conversation about it.
Right.
Because just doing something and then shipping it over, is quite different than actually eyeball to eyeball.
Yep.
Let's talk this through to make sure that you're clear about what's going to happen here.
Yeah. And it's actually, we were so heavy Zoom, you know, for a while that God just hated it.
I
like,
hated it too.
do I slip my wrist, right? Now we got away from it and you're meeting people again, which is great. And now we're actually trying to do the same thing. Like, hey, can you just jump on a Zoom call real quick and let's go through this, and you share your document.
Yeah.
The more you know, and just kind of go through the stuff versus just sending it and saying, hey, if you have any questions, let me know.
Right.
Because nobody does, and then we get busy.
And the Zoom thing has gotten normalized. People are less like scared about it, you know, and they're more natural on it. I watch Sheila, my wife, is on Zoom meetings a couple times a day. So last night she's got people. There's people from Canada, people from Florida, people from Ohio, India, Idaho. I mean, just all over the country, and they're having a conversation. She's got 12 things up on the screens, faces up on the thing.
Right.
And I'm listening to it, and it's like they could be in the other room talking.
Interesting.
Because they're just talking.
Interesting.
Yeah, very interesting.
So the point of all that is, right, have a conversation.
Have a conversation.
Work with people you trust. Rates are okay. They're higher, but we have strategies, and let's have a conversation, right? That's been the mantra for 20 years.
Yes.
Which has also helped set us apart. So give me a call, 651-231-2500, and we'll get you in good shape. So 651-231-2500.
Thanks for listening. This has been your Real Estate Chalk Talk. HittnerGroup.com, HITTNER Group. That's all one word. HittnerGroup.com. 612-627-8000 is the number to call if you would like to have a conversation about getting your home on the market or finding a nice, lovely home for you to buy. We'll be right back. Or we'll see you next week.
You've been listening to your Real Estate Chalk Talk with